Welcome back to another version or edition, I should say, of Anatomy of a Trade. And today I'm joined by Roman, and we're going to talk about a trade that was done in a crypto AMP by a student in the spring semester of WTC2, Thomas O. So take it away, Roman.
All right, well, right away, we just want to mention that this is not a full chart. We have had an extreme oversold condition, which identified a sell-in climax after a very, very prolonged uptrend. So this is our, true price structure. And then we go through what we see on the chart. And obviously, the first thing that catches my eye that on the 4-hour, we have quite a causality. So thinking about any type of counter to the downtrend rally that has causality. What does it mean? It means that we need to think about the extension of the targets. So therefore, you right away think about like, okay, so where are my targets in the downtrend? So this was actually target number 1. This was target number 2, and this was target number 3. This will become very handy when we're going to discuss the point of exit and where should we, in which areas of the price we should be considering any type of emergence of the supply and potential expansion of the downward result. It might not be necessarily reversal right away, but some noticeable extension of the downward result, like for instance a supply tail. The second thing here is that when we go through the trading range, I actually could definitely see how we're thinking here, how Thomas thinks here that this is phase C. Because the bias of this formation, more of the reaccumulation. The most important bar is still not broken. We did not overcome, this whole climactic run, a local climactic run. So I understand what has happened here. Having said this, obviously our preference would be to identify the phase C itself. Also to identify the way of how locally higher highs and higher lows are starting to happen. And therefore, this is our Wyckoff buy zone or a springboard. And also a really good point that Franz has is about increased volatility in this area. That also suggests participation. Participation by who? By institutional participants, right? Because only they can bring that type of volume signature and the result is expanding. The first reaction is quite significant, but it doesn't undercut the breakout low. Also, the continuation shows really good test. And then only on the final bar, we see that climactic surge of the supply. And this is one of the largest bars. This is the largest bar. So that contains a lot of supply on its own. And then this bar is extremely important. Not only it's a lower high, but it's an attempt that is similar to what we've had into the top, into the climactic top, but it's smaller by spread. It also has a supply tail, and again, inability to reach the previous high shows that weakness. Franz?
Well, I would say to our audience, first of all, take note of that last discussion of the performance of this chart near the highs, because this sequence plays out time after time after time, and it's something that you can definitely recognize as a setup for an exit. So that, and then if we look all the way over to the left at the beginning of this causality that Roman pointed out, we see some sort of buying climax coming in, and we see a very distinctive automatic reaction that sets the trading range, and it really does create a very strong sort of set of borders for us to operate within. And then if we look across the volume signature as a whole, we really don't see a whole lot of increase in the amount of shares, or in this case, cryptos taking hands, until we get a little bit farther through. So we might be thinking that that first reaction where the entry occurred could still be phase B. But other than that, Roman, back to you.
Yeah, well, this increase in the volume signature, again, it's really, really important in the low liquidity stocks and also in cryptos, because this is the period of inactivity, right? So how do we know that this period is done? Well, we don't see any meaningful demand right here. So this could have been timed based on the volume itself. If we were to wait for something like this, or especially something like this, then our entry would be somewhat later on, I agree. But at least time-wise, it would be more efficient. Our efficiency on the point of entry would increase. And then obviously, when we start discussing the entries. And I think that before that, just on the analytical part, this was the last bar that I wanted to discuss. Look at the close. I mean, like if you're thinking here, wow, there's a lot of supply coming in, that's true. What's your analog? It's going to be this bar right here. Supply is coming in as well. It's actually this bar right here. But look at where the close is relative to this breakout bar. This is a significant extension. And it happens on ever slighter lower volume signature. So that just tells you lesser supply. Franz, what do you see in the execution here?
Well, let's take a quick look at our post analysis and then we'll wrap this up. The visual recognition, Roman, the bias definitely right for this trading range anyway. The timing, I think you might have a couple of comments there, and the character good. And then the trade execution itself, points of entry, we're okay with that. The stop loss placement, definitely good. No add-ons and no trims. You might have a couple things to say about that real quick. And then on the exit, definitely needs some help. So
Yeah.
over to you, Ramon.
Yeah, so the timing of the entry, even though the entry itself was okay, we are entering on the reversal, and that's what we want. So therefore, we're gonna say that for the point of entry, we actually done the correct job. But the timing of the entry definitely leaves much to be desired, just because of the no participation. We want to be closer to the right rather than where we've entered. The add-ons, once we are in this area right here, we should be adding. And this is a mistake that, even, advanced students make. It's like whenever they are in the profitable position, you need to press on because you've recognized the opportunity and you're using it. So definitely a no here. I would definitely concentrate on that and exit itself. This is too late. And when we discussed this analysis with Thomas in the class, it was pretty evident that the exit could have been earlier. Where, first of all, target number 3 and the supply tail and the increase of the supply, very visible increase of the supply, should have prompted some kind of at least trim or full exit. And with the way how parabolically, this crypto goes up, this is a legitimate exit. The second exit, I would say, would be anything below this bar right here. So we have like a small break. So that's exit number 2. The third exit is on the next attempt to rally. And that's more preferable because it's more efficient by the price. So here's your third point of exit. And then the fourth one is the major global break of the global, hypodermic structure here. So if we are exiting, let's say in 4 tranches, scaling out like this, our average is probably somewhere here on the point of exit. This is definitely much better than what we see here being executed. Franz?
Okay, yeah, and I think stop loss management going into the climax, the buying climax there, could definitely have improved the performance. So when we do an anatomy of a trade, we're always looking for mistakes and best practices that we have a tendency to repeat so we can work on our mistakes and continue to exercise our best practices. And with that, Roman, thank you, and we're looking forward to our next anatomy of a trade. So goodbye, everybody.
Thank you, Franz.